I'm Greg McCoach, the mining speculator. I've been doing this for 19 years, hard to believe. I was reminiscing about how I got started in this business when I lived in Colorado. I don't come from a geological background, and so I was going to the Colorado School of Mines for the short courses and the summer classes I could attend. And I ended up, I guess, hanging out in the library a lot. And the librarian kind of went to some professor over there and said, "Hey, there's this guy. He's not a student. He's like here all the time. He's asking all these questions. Can you help him?" Yeah. And so I ended up getting a call from Ron Parrott and Dick Gunderson, longtime mining guys that have had lots of success, and they told me, "Hey, if you come over to Reno, we got a deal for you, right?" At Barracks, or it wasn't Barrack, it was Placer Dome at the time, back in 2001, and he said, they're going to set you up so you meet them here in the morning at the mine site at 8, and you'll leave at 6, and they're going to teach you about exploration, development, and production, because at the pipeline deposit, they had all three of those going at once. So I look back on that, how fortunate I was to have had that experience, because it really set the tone for what I've been able to do over the years. But anyway, today, let's just get into what I wanted to talk about. I always been using this picture for the last few conferences because I'm getting a lot of conversations and phone calls and emails from people that are kind of perplexed, like, "Oh my gosh, what is going on with these markets and what's going on in our world?" And I think there's a lot of people that are diligently seeking answers to what the solutions for these things are. And Gulliver, as you know, when he woke up and all the little people had tied him down, woke up quite surprised, I'd imagine. So I always like this quote: "Discovery consists of seeing what everybody has seen and thinking what nobody has thought." Hungarian-born biochemist. And I apply that to both geology, and here comes Chris Taylor. This is a perfect entry for Chris with "Discovery consists of seeing what everybody has seen and thinking what nobody has thought," right, Chris? Yep. Great Bear made their discovery, and by thinking out of the box. 4 other companies tried to make the discovery on that project at the Dixie, and with new thinking, they did it. They accomplished it. So anyway, I apply it to other things as well. Discovery in economics and what's really happening in our world. A lot of times you have to see what everybody has seen and think what nobody has thought to get to the bottom line. But 2019, I believe, is the year gold's going to finally break out. It's going to break out of its shackles. We'll talk a little bit about why I think that, but we've been waiting for this. I don't think in different bull markets over the years, since I've been a newsletter writer, sometimes the mining shares get ahead and the metals catch up. This time around, I think it has to be the metals first and then the mining shares. So we're watching what's going on. And, you know, the fact that gold has been holding fairly good until Friday between 1310 and 1350 was a very encouraging sign. And with some of the other things going on. So this knockdown on Friday, let's see what happens during the week. But I'm hoping that we can get right back up on top. And I think that's going to set the base for our further success later this year, where we could break out above the technical 1365 resistance level. Because after that, there's no technical resistance till 1700. So that, can you imagine if we were, you know, on our way in that direction? So it's been a tough road for gold these last 5 years. It's been baffling for us gold bugs. In an environment of massive central bank money creation, rising government deficits, and a populist takeover of many countries' political systems, all of which should be good for safe haven gold, you know, gold has spiked to around 1350 4 times, only to be smacked back down each time. Very demoralizing, very disappointing, of course. And now our latest run over the $1,300 level is being threatened. So I think it'll be short term, because the bigger picture stuff is really starting to play havoc with the liquidity in markets, and we're going to talk about that. So I maintain that we need to ask ourselves some basic questions. Is market volatility going to increase, decrease, or stay the same in your view? In my view, I think it's going to greatly increase as we move forward. Will instability and division in the world increase, decrease, stay the same? I think, again, greatly will increase. could lead to some civil wars or revolutions, around the world. We're seeing crazy things happen, right? So safe haven issues, will they increase, decrease? Like obviously, I think they're going to increase, and what sectors would benefit based on those assumptions? And of course, undervalued gold right now. It's the only asset class that's super undervalued at this point. So what are the tailwinds? We know what the headwinds have been, but I'm starting to see a change. The tailwinds look like they're going to help us push forward here. So first of all, the merger mania that's underway, the Barrick Randgold $6 billion merger, I'm sorry, and the Newmont Gold Corp $10 billion, so that's $16 billion already. And now we see Barrick wanted to go after Newmont. Of course, that's going to be very hostile. Those two companies have egos the size of the Pacific Ocean, and it's going to be a very nasty situation. So we'll see what happens. But it's very reminiscent to me when I first got in this business, and we were in the depths of despair because of the Bre-X debacle. People didn't want anything to do with mining. And I started my newsletter right in the depth of that. And it turned out good timing-wise for me, because by 2002, things started to change. And the dollar started to roll over, have some problems, and gold started to increase in stature, and the merger mania took over, right? So again, those things are happening again right now, and that's why I think we're going to see a change here that's going to be good for gold. Gold production lately is plunging, and then you have the Fed issues with the QE, they take it away, and then they're tightening, and then all of a sudden the markets go down, so they realize, okay, if we're not going to give it the juice, the markets are going to collapse, so we got to give the juice again. So that's all kind of a big problem in my view. And then there's the gargantuan debt and leverage on that debt throughout the whole system is just choking on all this debt that's not sustainable in my view. It's personal, it's city, county, state, federal, countries. It's just crazy. And so we're seeing too little capital in this environment. And so now the politicos are talking about wealth taxes and cash grabs and however they can raise capital, right? And I think this conversation is only going to continue. But the numbers are so absurd with this debt. Here's an interesting, sobering fact. Let's take the wealth tax they're talking about. Some say 10%, some say 70%, right? But even if it was 100%, even if you taxed the top 1% of the wealth in the United States, you taxed it all, took all of it, it would only finance the U.S. deficit for less than 6 months. That's how ridiculous these numbers are. So putting it in perspective, these numbers are thrown around all the time. Trillions, quadrillion, billions, right? What does it mean in terms of seconds? It's a good way to really get down to the nitty-gritty. 1 million seconds is roughly 12 days. 1 billion seconds is 32 years. 1 trillion seconds is 32,000 years. That's a big, big number. So 1,000 billion is a trillion. 1,000 trillion is a quadrillion. You have some crazy things going on. Anyway, so the Fed, the other point I want to make is that the Fed, in my view, has lost all credibility. I don't know why people even pay any more attention to them, but the fact is no matter what verbal interventions the central banks or the political elite issue, liquidity is now rapidly leaving the financial system. Anyone who continues to believe, in my view, the Fed has any clue what it's talking about in terms of forecasting or the impact of monetary policy on the financial system, I think is naive. They're talking out both sides of their mouth in wicked vicissitudes. One week it's this, the next week it's totally opposite, right? And why is that? Well, it's because they're caught. And the Fed should have taken its pain back in 2008 and dealt with it, but they didn't. And in my view, in my life, and with family and others, sometimes pain is a good thing. It's a corrective process. It's not easy to get through, but if you take your pain medicine, you get through it and you're a better, stronger person for it on the other end. Had we done so, we'd be in a much better situation right now instead of the terrible dilemma that's facing the world right now. So instead, we know the system is addicted to the free money. It's like a drug addict, right? They keep having to take more and more of the drug to keep going, right? But then their health collapses. And, the whole financial system is addicted to this easy money. So in my view, the Fed is caught. It appears to me we're about to find out what happens when 40-plus years of excessive debt accumulation come to an end. We have seen time and time again that the central banks will do just about anything to avoid the consequences they have created. They're the ones that cause these problems, not the people. Can they kick the can down the road one more time? Well, they're certainly trying, right? As they started to tighten because inflation was rising in the world, in the financial system, they decided that we're going to start to raise interest rates. We're going to normalize interest rates, they said. We're going to cut the Fed balance sheet, right? We're going to reduce it. We're going to cut the QE. We're going to do QT, tightening, right? But, well, look what happened. The stock market started falling apart, and they changed gears quickly because that tells you there's a problem. If the juice isn't there, there's no way to sustain these bubble markets. So as investors, you got to pay attention. So ultimately, this is what I think investors must decide for themselves. Do you believe in the Fed miracle, that this can go on, that debts don't matter? Or do you think eventually this is going to collapse? Of course, we don't know the time frame. We can't predict that. It's impossible to predict it. But there's not debatable that it's going to happen, in my view. So debt will matter, okay? The United States national debt, just crossed the 22 trillion mark for the first time, an amount equivalent to $67,000 per U.S. citizen. The U.S. federal government owes more money than any other institution in the history of human civilization, and it's getting worse. On top of this, 22 trillion, we know that they have made promises in the future that, conservatively speaking, are at least 100 trillion. Some people quote it as high as 200 trillion. Right? Well, that's ridiculous. It's just that promises are going to be broken. Those payments are not going to be made at some point. There's no way that they have enough money to do that. So the U.S. debt is now higher than the combined market value of the Fortune 500, and just with the money it spends on interest every year, it could run Canada or Mexico. Debt from one Trump term could pay for another World War II, and all the gold ever mined would only pay off the debt accumulated under Obama. So, another statistic here. All the gold in the world mined since the dawn of time adds up to about 190,000 ounces, or 190,000 tons, or 6.7 billion ounces. At the current per ounce price of gold, about $1,300, the world's gold hoard would be worth over 8.5 trillion, and that would not be enough to pay off the debt, the U.S. debt accumulated just between 2009 and 2016. My thesis is this: mankind has been hurtling towards a disaster of its own making for quite some time. For almost 20 years now, I've been pointing out what I see as the unsustainable trends in society that now appear to be converging towards some terrible conclusion. I say these things not because I'm fear-based or because I enjoy crisis, but simply because these are the times that we find ourselves, and this is what we must deal with. And I think from an investor standpoint, that's very good for gold. And those of us who are awake to these realities, we need the best information in order to make informed decisions so we can survive and thrive in these crazy moments that we're living. Sooner or later, the illusion of prosperity created by all the dumb money these past 10 years is going to go by the wayside, and that's when we discover the ugly truth that there is no actual liquidity, only the appearance of such as temporarily provided by the computer algorithmic programs that run our stock markets. Fact is, over 85% of all trading is now done by algorithms or trading programs that automatically buy and sell based on preset inputs. When the market's going up, that works great. When the market goes down, it doesn't work very good, as we saw in December there when the market had the huge sell-off. Stock market dropped more than it ever had, then went up more points than it ever had, then swung up another 900 points in volatile fashion within the last hour of trading. This all happened within a 48-hour period. So that's telling you something's wrong there, right? That's not normal. That's not how things should be, right? So where are we in the cycle? For the past 10 years, the Fed has continued to feed the dumb money, the QE, into the system, which has created all these asset bubbles. Graham Summers calls them the everything bubble. I've been quoting from him recently. He wrote a book called The Everything Bubble. I think it's a must-read book for anybody who wants to be informed on these issues. You can get it for $11 on Amazon. But you know, I remember Bernanke in 2009. I remember he made this promise. He said, "Oh, we're just going to do this quantitative easing for a few months just to get the economy rolling again." And he said, "Oh, we'll stop this and we won't monetize the debt. We'll never do that." Well, that's what they've been doing for 10 years. It's permanent, right? It's a sad fact, but you know, these people lie to us all the time, and I just wonder why people put any trust in this institution anymore. It's beyond belief to me. But so by late 2017, though, we started to see the inflation ramp up in the society, right? Prices of goods, foods, services, everything was going up quite dramatically. And so they knew that they had to do something, so they decided to tighten a little bit, start raising interest rates to try to keep the inflation in check. But it didn't really work, right? Now we saw what happened, and now they're back to giving it the juice, you know, pushing the QE in again. So no more correcting the Fed balance sheet, no more, you know, doing the things they promised they were going to do just in the last 15 months. So they've reversed course. They're trying to, you know, kick the can down the road for as long as they can, and it's up to us as investors to decide, you know, when does that process come to an end? We just don't know, but it seems like it's converging very quickly now on multiple fronts. The problem is this time around, it won't just be the overvalued stock markets that take a hit. It will envelop anything bubble, right? Real estate markets. I had a conversation with several people recently where they said, "Oh, Greg, you know, we just made $1 million on our real estate, you know, and we took the $1 million and everything we had, and we bought more house than we could afford, you know, so that we could take advantage and make another big chunk of money, right? And so they have this gigantic mortgage now." And I said, well, I mean, that works as long as the QE and all this holds together, I guess. But, you know, it's very dangerous if it falls apart like it did in 2008. So we're looking for a catalyst. We're looking for a bigger safe haven catalyst that's going to allow us to push gold through the 1365 technical resistance. We just haven't been able to get over that for a long time now. And that's the signal and the moment when we know we're in a true breakout. When we go through 1365, you know it's game on again. And this conference, you know, this is the time to buy. When you see this few people in the audience, time to buy. Okay? When it's packed and people are standing in the aisles and the sides, time to sell, right? So I'm saying it's time to buy again. You know, don't fear or worry about what you can't control, but look at this as an incredible opportunity to make a lot of money. We all know who have been in this industry, you know, we know that when those moments come, you can make up a lot of money very quickly. You make up for old losses and get whole again. But we have to concentrate on what we can control. So much of what's going on in life is out of our control, but you can own gold, you can own silver, you can own the quality mining shares, you can take a preparedness mindset. After that, all investors can do is get out of the way and let the governments and central banks of the world commit economic suicide, because in my view, that's what they're doing. So gold is the retail investor's hedge. It's the best only item in I see out there that can protect you, but it's the retail investor's hedge against government and central bank instability, insanity, and less faith in our established institutions. That's pretty much the message, and I think the four strategy for profiting right now in the mining stocks. We have a lot of good companies at the show, and they have a lot of good projects. And of course, this conference screens the companies. The newsletter writers screen the companies that get in here. So you're on a heads up by attending this conference because you know that these are good people. Whether they have success with the exploration front or not is you know, that's up to the drill and the wisdom and intelligence of the team. But right now, I see a lot of discoveries that have happened in the last couple of years that are trading at low levels. And so you want to look at those, because when gold goes, these discoveries are going to ramp right back up. Buy the exploration companies with the best odds and the best jurisdictions. We have a lot of those on our panel today. And buy the strongest development and production stories. Companies that have production. We see what's going on with the trickle-down effect, I think, will happen with this merger mania. I think after the majors get done eating one another, they're going to go down into the production stories. The ones that have the gold ounces that are in production, they'll start buying those. Anybody with 1 million ounces or more will be a target for sure. and it should lift our entire gold sector. By the companies also that are trading at or near cash, you know, EMX Gold that's here, the royalty model, you know, $65 million war chest of cash. I think their market cap is like, you know, it's not not much higher than that, you know, so you get the stock for dang near cash value. So I really like that. And, you know, to subscribe to any of my letters, discoverynexus.com. Thanks for listening.